word on the street is that the Trump administration is planning on introducing more exotic investments in 401k plans. These include cryptocurrency, potentially gold, and private investments. These can spell potentially disaster for some people's 401k plans, and there's pros and cons to the ideas of this. We don't have anything laid out in stone right now, but you could potentially see these new options come up in your 401k plan. One of the main concerns I have for private investments in 401k plans has to do with valuations and the relationship on past returns. You may be looking at your plan lineup and see returns over a 5-year period. A lot of investors, especially retail investors, may just look at the highest returning thing and say, I'm going to put some money in that. But what could be happening underneath the hood is that these returns are manipulated by the fund, where a lot of the returns that are good happen in the early years of the fund. And then they save all the bad investments for the later years of this fund. And so it inflates returns in the earlier years. And so you don't necessarily know that this double-digit positive return is going to continue or not. You have to do your research and you have to dig underneath the hood to find out what's really going on. With that said, there are good managers and bad managers. Some managers value things more conservatively than others, but what we see in the data, particularly around the time of fundraising, funds are very incentivized, private equity investments are very incentivized to inflate their net asset values because it encourages more money into the new fund that they're raising. This introduces a new conflict of interest in how funds report returns.